Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap. And we have a very, very special guest with us this evening, the man whose name is on the side of the building, Riz. How are you doing this evening?
Doing well, Chris. Thanks for asking. I hope you're doing well as well.
Absolutely. No, it is a beautiful day here. We're all able to get together, talk markets, and just enjoy each other's company. So it is a spectacular Saturday here for Riz Elite. And let's go ahead and get started. Let's dig into this. We got the S&P 500 here, and we made a new all-time high. It looks like on Monday closed right at around 4480.26 is the new all-time high on the S&P 500, but then kind of had a little bit of a rollover. Riz, do you think this is a bit of a reaction to what's going on in Afghanistan? Obviously, that is in the news left, right, and center here. I know I'm getting bombarded with it. Or is there something else going on? Is this the correction that you're thinking was going on? Or what are your thoughts? Is this?
Yeah. So to put simply, nothing individually has to do with the destabilization and sort of the chaos in Afghanistan. I mean, I know it makes sense, like, well, look at what's happening. It's a crisis, and I'm not going to get political about it as always, but it's a challenge here in the fact that it's not to do with that kind of chaos, but it has to do with other kind of chaos, and that is more so on the home front for most of us, whether you're in North America or Europe or Asia, wherever really, and it has to do with more so, I find, one, inflation, two, I would say, frankly put, any kind of COVID jitters, whether you want to call it the Delta variant or increasing cases or COVID as a whole. In a nutshell, these are the major 2 points right now. We know the infrastructure bill is already done. We know majority of large earnings releases are done, and it's what it. These are the two kind of things that I would really kind of say are at point in mind, right? So to put things into perspective, we only had a 2% drop from highs. So, it's not much at all. And I would put this more so in the realm of, a slight little drop, nothing major. We're not even in correction territory. Isn't it a 10% drop or anything? And as you have such nicely outlined there, those two kind of trend lines there, or that channel that you have, you could call it an ascending wedge, whatever you want to call it, really shows you that, the market's been chugging along, and we do get a little bit of curling down once in a while, but it gets bought up. And Friday and Thursday even was no exception to that rule.
Absolutely. No, I mean, it was a spectacular recovery on Thursday and Friday. Great little bounce there on the S&P 500. And obviously the market makers are here in our chat watching, because they have respected my channel for quite some time now. And the market just continues to trickle upward, as you said earlier. So one of the things you mentioned there, Riz, was the infrastructure bill being passed. And obviously that was a huge bill that got through, the Congress and the Senate. But one of the terms that we use a lot is we say that was kind of baked in because we didn't see like a huge jump when that bill got passed. For somebody who maybe is new, maybe you could explain exactly what it means when we say that it has been baked in.
Right. So when we say baked in, priced in, many different wordings, it means that the market has, digested it. In other words, it's factored it in to the current price action. So if I can tell you, let's say the infrastructure bill was a colossal failure, it completely was dead and was shut down, and it was a surprise. If the market has been expecting it to pass, but it didn't, meaning it was a negative surprise, then I can assure you, okay, that the market would have dropped. How much? No one knows, and that's besides the point. But we do know the market would have pulled back. Because the market was expecting it to pass, and it did. So now that catalyst is checked off. We're square. When I mentioned the earlier catalyst of inflation, that's still an ongoing thing, right? Market knows that inflation is higher. We know, it's about 5.5%, 5% or something like that for the year, and on an annualized basis. We know that it's running hot. We know that the Federal Reserve was targeting about 3% annualized, and the market initially didn't react too well at it from that, but it still continued onward with the anticipation that it would come back down into normal region. It is perhaps transitory. Again, I'm not saying it is transitory, but perhaps it's something that will come back down and it's not permanent for the foreseeable future. That's what the market is kind of expecting. So we see these things happen all the time. A good result comes in for an earnings, and okay, it's priced in now. You can't say, oh, okay, well, this is a classic example I'll give of the iPhone. We know, generally speaking, every September, October, Apple releases a new iPhone, right? It's not rocket science. It's, you don't have to be someone who can tell the future to know that. But it's a new product. We know it's going to have a tremendous amount of sales. We know that it's one of the major products for Apple. Does the price go up because September is coming along? Not necessarily. If it does, it's not for that reason, because that's priced in. Now, if we expect Apple to release an iPhone in September, October, the new one, and somehow Apple comes out and says, "Oh my God, we've been sleeping on the job and we didn't even prototype this." Well, I can assure you the Apple stock is going to drop, because the market, what it expects, it wants, and what happens if it does happen in terms of what the market wants, then okay, great. Either you can continue the ride. If something happens in, I would say, counter to what the market expects, well, then it's going to be a bumpy ride, right? So that's the best kind of example I can give. You wouldn't go out and buy Apple, or I wouldn't, just because September or October is rolling around and the new iPhone is going to come out. No, you buy for other reasons, not for something that's baked in. Okay, so I hope it kind of makes sense. In action, it does. In the explanation, it's a bit difficult to kind of put together, but I assure you, once you kind of see this in action and across multiple different stocks or markets even, and you realize that, okay, this catalyst is over, on to the next. The market is continuously moving in and pricing in different events. We saw that. What was the biggest pricing in last year? March. COVID. It priced in COVID with that 35% drop last year, one of the fastest drop ever. That's what it priced in. Then what did it do? It started pricing in the recovery. Look at that recovery. The market has doubled, okay, since last year's bottom. Okay, that's 100% increase, give or take, since last year's bottom. And so that's doubled. All right, the market has doubled in a span of a year and whatever, it's 4 months. Okay, so let's just say you could see for yourself. Okay, I find that it's extraordinary once you realize how the market works. Market is a forward-looking mechanism. Okay, it priced in a recovery in the economy. It started pricing in a vaccine, and again, not getting political. It started pricing in, people going out and traveling or buying things, and that's what you saw. This is why, April onward, people are like, Riz, we're in a pandemic. It hasn't happened in a year, and people are dying. And I'm like, yeah, it's horrible. They're like, well, why is the market rallying? Because the market's forward looking, right? And it's boggles our mind, and even boggles my mind. How can we be in potentially a recession? And actually, U.S. based, that was one of the shortest recessions in the history of the United States. It lasted 2 months, the shortest recession on record. 2 months. That's what it react. And again, the charts, S&P 500 is not going to show you that, but economics wise, a recession, when we categorize a recession, we say 2 decreasing quarters of GDP, and guess what? It lasted 2 months. And once you have that, consecutive drop in GDP, you're now in a recession. And then once you come back to previous levels, the recession's over. And we came back to previous levels in about 2 months, right? Give or take. So what an extraordinary, fast-paced world we live in. So besides going on this, I can assure you that many factors are priced in. Manufacturers will be priced in. I am currently monitoring the Delta situation and inflation, as I mentioned earlier at the start of the webinar. These two are components and catalysts, that I feel are not completely priced in, but it's a moving target. That's what makes it so difficult. With the infrastructure bill, we know, okay, they maybe backstop it, maybe they wait, maybe they make adjustments, maybe it gets paused, but we know the event has to be binary. Either it goes through or it doesn't. When it comes to inflation and COVID, especially the COVID Delta variant, that's not a binary thing. It's is it going to get worse? Is it going to stagnate? Is it going to get better? Is it going to be completely eradicated? I don't know, right? And same with inflation.
Awesome. Thank you for that great explanation. That's a really good way to put it. Let's go ahead and take a look here at the different market sectors that we have going on. And obviously, man, energy taking a bit of a beating. We'll see why here in a second when we take a look at oil. But market is chugging along, sitting at up 20% on the year to date so far. Utilities still underperforming. That has been underperforming most of the year for the most part, and is really struggling to get up there at this point. Though everything else is above the S&P 500 right now. Healthcare making a move. Energy, even though taking a big dive here, still above on the year over the S&P 500, sitting at almost 20.9%. Tech making a bit of a push here. I'm guessing earnings may have had a little bit of help to do with that. And financials and real estate still really pushing up high here. Looking spectacular, up almost 30% on financials, and real estate up almost 33% on the year, just tearing it up. Riz, what do you make of this? Obviously, huge dump in oil, and we'll talk about that here in a minute. But what else is going on here that you see?
Yeah, so we can, not surprising. We've seen oil dump because, like I said, there's fears now of potential lockdowns. I know that's a swear word, but there's potential fears of that, fears and more travel restrictions being reinstated across the globe, and, a potential decrease in oil demand. And as a result, that's what we're seeing here. We're seeing supply has remained consistently the same since the last month or two, since OPEC met and decided to increase supply a bit. So that's remained the same, but the market is now pricing in potential slowdown in demand. And you can see, if later on when Chris brings it up, we'll see the price of oil, and it's come down quite a bit. And I'm going to touch on whether it's an opportunity or not later on. But when it comes to the other sectors, utilities actually has been one of the strongest, along with healthcare, XLV, because we know these two areas are seen as defensive and potentially inflationary agnostic, meaning they're good for, I think, getting through a high inflation environment, right? And you could see that starting, since June area. That look at the momentum, look at the upward slope of that recovery on these two sectors. Compare that and contrast that to something like energy, right? XLE. Compare that to something like XLK, which is tech. It's been chugging upwards in terms of tech, but not in a very aggressive manner like utilities and healthcare.
Awesome. Thank you for that. Yeah, definitely utilities and healthcare making a move. People are going to need those whether, there's a virus or not. And obviously if, something like Delta does start, we're seeing a resurgence in that. Healthcare are definitely going to be in high demand, to say the least. All right, we just talked about oil. Let's talk about oil. Holy cow, oil taking a dive here since looks like the second of the month in a huge downtrend. You mentioned, questions going out to OPEC. I know that, the president made a call asking them to increase supply to help reduce the price here in the States of what people are paying at the pump. Riz, what are you making of oil here? We seem to have topped out here right around 76.88, 76.90 or so, and it's kind of been downhill for oil since then. What's going on here?
Right. So, yep, we saw, really big pullback, one of the biggest pullbacks in oil for a long time. And you know what? I personally feel like this could be a good opportunity to build a position, whether you directly trade the futures contracts or whether you participate via an ETF. I think, or you could even, as a proxy, consider oil, you know energy sector stocks, whether it's Shell or Exxon or whatnot, right? So how you go about it is up to you. But I do find that in oil prices, I think 60 area is when I start taking a full position. Right now, full disclosure, I do have a small position. Um, Again, relatively in USO, as the elite members know, that's the oil ETF that kind of tracks alongside the movement of price per barrel. So taking a position there, going to see how oil does on Monday to see if I average in further. But I do like oil price per barrel at 60 a lot, and if we get there, you know what? I'm not going to be complaining too much because I find that that's a good level. Sure, can I go lower? Maybe, but I find I'm comfortable and okay with holding this. Keep in mind that if you hold something like a leveraged ETF that tracks oil, or if you hold, near dated options long on oil, just be aware of the risks of that. Okay, I'm not going to get into the whole risk of leverage ETFs and the potential decay, but just be aware of the kind of the shortfalls of doing that and holding that.
And then, we see gold making a very sharp recovery here over the last week and a half or so after this massive drop that we had starting the month. Riz, I was looking for some news on gold as to why this was going down. I didn't really find anything convincing. Did you have anything or any insights on gold as to what caused this drop? And then obviously we had a great recovery here off of support right around 1680.
Yeah, so that big drop you see was actually one of the largest, I believe, sell orders in the gold spot market. So that there was, I think, a large institution or someone just dumped gold, and of course, that much volume, that much supply, uh, and it just pushed down. It just pushed down the price very, very quickly. But eventually that was kind of rectified and bought up too. And now here we are again back near that 1800 level, which I think is just about right for gold. I'm not um, jumping up at the opportunity to buy anything in terms of gold or metals just yet. I don't think it's also either working too well anymore as a hedge either. For the time being, it hasn't worked too well as a hedge of risk or volatility or inflation even. So I think, you know what, at this point, I find that it's best to just leave it alone and just monitor and let it do its thing.
Fair enough. Fair enough. Some things that people think are interesting to go ahead and get into is cryptocurrency. Bitcoin making a massive push here over the last, about almost a full month here, starting in the end of July, making a huge push here over the last couple weeks after being in a downtrend for quite some time after finding the top here at about 64. We are starting to push back up. 49,000 seems to be kind of the top right now for Bitcoin and cryptocurrency in general. Obviously, I know that we don't have a position in crypto right now in Elite. It's not something that we typically look at, but I do know a lot of people are in cryptocurrency. Riz, do you think that this is another? I mean, the volume isn't too ridiculous, all things considered, but yet we're seeing these massive swings here in Bitcoin. What's your take on cryptocurrency right now?
So when it comes to BTC, it's funny. You mentioned in fact, I think it was just when maybe I think 2 or 3 weeks ago, I taken a quick little small tiny position in Bitcoin, and I probably took maybe a week, 10 days or something, and I just made 20% on it, and then I just took it off 20-25%. I took it off, so I bought around 32,000, um, and then I sold it right near 40, right? So took that little money, took it off, and that was fine. And For me, in fact, I got out and then it just dropped a little bit, as you can see, after that first touch point when it hits around 42. And right now, this kind of rally past 42 and in past 45 and into the 50,000 zone is, very, very bullish, very good for those holding crypto. Where it goes from here remains to be seen, because this 50,000 area is, I would say, a decently strong resistance level. If it breaks 50 and kind of stay up there, I think you would not be surprised if it goes to 55 and 60K a coin next. But what you mentioned, Chris, is the volume isn't too something to be too excited about right now, and that's kind of the only thing I'm worried about. Along with, volume isn't too big a deal in crypto, because we know that this is just one exchange base. We know crypto, like BTC, is listed on dozens and dozens and dozens of different exchanges. So without combining all that, we don't get a full picture. But compared just on Coinbase is what you have here. It's definitely on the lower side. So with that said, keep an eye on crypto. I don't have a position. As I said, I took it off for some money, and I feel like, I think this could continue to run unless we see some further, FOMO or like fear-inducing stuff where, the Fed comments or something about China or something of that sort.
It's interesting. One of the things, I was at an amusement park here a couple weekends ago, and the hype around crypto right now is just nothing short of ridiculous. I heard multiple people talking about crypto while we were standing in line for some rides. I really had to bite my tongue and just kind of let them go. It was very tempting to kind of give them some. Let's just say put a little Riz knowledge on them, but I just kind of let it go and let them have their little discussion. But it was pretty comical. So I would say for all of you here in Riz Elite, be glad that you're here, because we have this knowledge here that we can share with you about what's going on in crypto, what the real story is, and kind of how to handle it appropriately. Because I'll tell you, what they were talking about was kind of scary, and I was like, makes you shake your head sometimes as to what people do in terms of crypto and what they believe. And obviously we preach a lot of caution here because of its unregulated nature. It can be incredibly dangerous. And there are a lot of people still holding the bag up there at 64K on Bitcoin. Now, it may get back there, it may not, but just be careful. Kind of like what Riz illustrated here. If you do trade it, look at it as a short-term thing. Get in, make your money, and wave at the crypto markets as you take it to the bank. But just be careful if you do look into crypto and things of that nature. So, all right, so that is our full market recap. Riz, do you have anything you're watching this week, or are you a little too concerned that the market is just keeps pushing up and maybe things are just not ready for a buy yet?
Yeah, I'm still in that kind of cautious mode. I said initially, I'm still neutral bearish. Yes, Thursdays and Fridays price action was very strongly bullish, but I'm still on the fence. I'm happy last week that I was able to call a very precise 4,400 level as being kind of the floor, and it was, and it was bought up right around 44 during market hours. And yeah, after hours, it went a little bit lower, but picked up strongly. But the 4,400 was a very strong level. And you know what? It held, and it held really, really well. I'm also glad for the time being that I closed our hedge for profit via UVXY calls. So for now, I'm more so in a wait and see approach. The only thing I really did last week on Thursday was take that USO position, and of course I'm doing some Raptor method short puts. But otherwise, not too much has changed in terms of my positions. More so in a wait wait and see approach. So in terms of trade ideas, really we want to see what happens with the markets once we kind of get a better direction. I find that we are in for some volatility, or continued volatility, I should say, heading into the fall months.
Yeah, and this is something you're not going to get in a lot of other rooms, in other places, because everyone's going to go, oh, buy this, buy that. They're going to be trading for the sake of trading. And that is probably the fastest way to blow your account up, is taking unnecessary trades, over trading just for the sake of saying that you've done it. And that is something you're not going to hear other places. We want you to trade smart. And that is what we're trying to teach you how to do here. And I think that right now, this caution that you're seeing is an excellent example of that, because, the thing is, we're not just throwing out trades left, right, and center. We're not trading for the sake of trading. And I know for some people that can be kind of frustrating, because they want to be in, they want to be out, they want to be turning profits and things like that. And you get, bewitched, for lack of a better term, by, these other quote unquote gurus, which is another dirty word around here. And they'll be showing like these Instagram posts with these ridiculous gains. But guys, I want to caution you away from that. Trust me, we have done our competitive research, to say the least, and we kind of understand what they're doing. And I'll tell you right now, if you want to grow your account, if you want to have a win rate like we have, this is the place to be. Sometimes it's not sexy. Sometimes it's not, like $1,000 gains every day. But if you build that consistency, like we're trying to teach you how to do here, if you take your trades, like a sniper approach, like we're looking for that entry point, that's where money is made in the market. And that's what we're trying to teach you here. All right, I want to go ahead and open up the floor to questions. Riz is here. This is your opportunity, guys. If you have questions for Riz, if you want to look at things, talk about overall markets, I'm sure you all have been typing them in the chat ahead of time, waiting for me to say that. Going to hit that enter button here shortly. I see lots of people typing, so I'll go ahead and let you guys get those put in there, and Riz and I will tackle your questions one at a time. We don't want to miss anything, but yeah, what is on your mind, guys? Let us know down in the chat. Pins. Oh, yes. I had a feeling this one might come up. So spectacular earnings on Pins, Riz, but it really sells what's going on.
Yeah, so with these kinds of social media websites or social media platforms, I should say, we know that revenue is one thing. We know, earnings or lack thereof is another. What is another big thing that's very much specific to these kinds of user-based services and offerings like social media platforms and whatnot is the AMU, right? The average monthly user. So the reason Pins had I think it was like a 15% drop right after earnings was because they were really, I would say, they gave guidance, but they said that, our overall monthly users is down about 5%. Now, this isn't too alarming, but I find that the market has overreacted, and it doesn't help that, growth stocks have been getting battered. It doesn't help that, markets are a little bit more turbulent. But the reason I find that this has stayed low is because of that. Now, the drop I find to be semi-warranted, but not a 20%, discount the next date. And it's why I have a position and why I'm holding it. Because Pins is one of the, faster growing social media platforms outside of, Facebook and Instagram. We have, of course, TikTok, which has been the biggest grower, but not public. So we have Pins as one of them. Obviously, Snapchat is another, but I find Snapchat to be a bit overvalued, whereas Pins I find to be a little bit more juice in terms of valuation. And I think this is a good opportunity to either carry or start a position if you are not in it, right? Just my 2 cents on that.
Great question by Tom here. Since you mentioned averaging down, Tom wants to know: is there a magic number of times you would stop averaging down on a position?
So never a magic number, never a hard fast rule. But I would say at this point, if you have already averaged down, let's say, we got in before earnings, I believe. If you did average down post earnings once, whether it's at 60, whether it's at 56 or whatever, I would not average down any further. Okay. For it's a very case by case basis, but I would not average down any further if you already averaged in.
Awesome. Yas says, hey, what is the plan with Lyft.to? I know Riz had a position in it before. Do you plan on averaging in since once the floor is established? Let me pull that up. I don't think that's the ticker, bro. You mean LIF? Okay, there we go. Ooh, yeah. LIF taking a beating here. Riz, what are your thoughts on this one?
Yeah, so you know what? This is a position that I've held, and it's been a longer term kind of position so far. I have some. I did get rid of some already before the drop, but I still have some. I'm not going to average in now. Um, I'm just carrying. I'm just going to do covered calls on whatever I have left, and of course collect some dividends as well. But I do hold some. I did sell some prior, right? The reason this is down, for those of you wondering, is because of the crackdown. I wouldn't say crackdown, but I would say a change in the kind of environment of China, where they had been, pushing a lot and increasing, steel production, and iron ore is part of one of the largest, components to have steel, build steel, and steel is used obviously in large amounts for infrastructure, buildings, yada yada. China is potentially slowed down as a whole on steel production. So bada bing, bada boom, here we go. It negatively impacts LIF, an iron ore company, right? Or any other iron ore company. It's not just this one. They all got hammered. So this one primarily. LIF had a phenomenal run, and one of the reasons why I did so well in it is because of its ability to provide iron ore and iron ore demand in China and globally. When you take China offline a bit, well, now comes the repricing and the baking in, and it's kind of come full circle, right? Where I mentioned pricing in and baking in, and here we have that happening. So been a big drop, much bigger than I anticipated, but it's fine. From 50 to 40, what is that? I would say a 20-25% drop right there, very easily and very, very quickly at that too. So I'm not going to be averaging in. What I might do is do some short puts, cash secured further lower. If I get it, I get it. If not, I keep the premium. But that's just my take on that.
And if you're not familiar with the short put strategy, you guys definitely need to get in on the options masterclass. If you haven't done that, it is definitely worth the money. I have heard multiple students who have made back their money from investing in the class, investing in their own education within a month or less, using the Raptor method, which Riz outlines and actually describes in great detail in the class. So guys, if you haven't done that, make sure you take advantage of that, because it can be an absolute game changer for your account. So definitely want to encourage everybody to do that. Brian says, I'm interested to hear your opinion on USO and the energy industry as a whole. I'm sure Riz has plenty of things to say about USO. We talked about it here a little bit earlier in the market recap section, but did you have anything you wanted to add, Riz?
Yeah, as a whole, just to summarize, I think USO is a great entry. We took an entry, as you know. I think it's a good entry point, and I will continue to average in. And of course, this is going to track the oil price, but price per barrel, if it gets closer to 60, then I'll probably by then have a full position in USO. And I find that energy companies are still fine. I wouldn't go out there looking to allocate your entire portfolio or even a significant chunk of your portfolio to energy. Not anymore, with the way the world is going. But it's definitely a fine it's definitely fine to have a certain manageable position or a percentage, I should say, as part of your portfolio to having these traditional forms of energy like oil and whatnot. Because as much as the world is changing, there's also many things that are staying the same. Many people do not know, that oil, okay, and oil byproducts are used in pretty much everything in our daily lives, whether it's the clothes you wear, the fabric, the synthetic fabrics we wear, whether it's, kind of the plastics, the plastics that we use. There's so many different applications for traditional oil and its byproducts that it's not going anywhere. Yeah, I mean, do we see oil demand decreasing as a whole? Yeah, primarily because of the shift in mandates and regulations on automobiles, right? So that's the biggest thing. But it's still okay to have exposure to oil and oil-based companies, but strategically. Okay.
Awesome. Thank you for discussing that. Just in case anybody's wondering, they're looking here like, well, Riz, the price of USO is 43. What are you talking about 60? Guys, he's actually talking about the price per barrel here on light crude oil. So he's referring to this 60 here. So just to be aware, just so there's no confusion about that. Okay. Jack says, I bought MA at 360. Chart looks great to me, at least. Can you give us some of your insights? Well, absolutely. That is what we are here for, Jack. Jack in at 360. That is okay. So, I mean, MasterCard obviously not going anywhere. Pretty sure that people are still going to be using their MasterCards for quite some time. Does look like it might have some bit of support here in this descending support line, but definitely in a pretty big downtrend and has pushed below the 200 simple moving average. Riz, what are your thoughts here on MasterCard?
Yeah, I mean, you got a pretty good entry. I actually saw this as well last week, but I held off due to market environment. But this is fine. If you're doing this as a swing trade or medium or long term hold, and you have patience, this is actually a great company to hold. They've done really well. I don't see that changing. It's good management, and of course the technicals also line up. So yes, bravo, great entry on a great company. So long as you have the ability to hold and carry. I just hate it when people get into these, and I'm not saying it's you, Jack, but like other people that get into these kind of companies and they just want it to boom, reverse and start moving like it's fucking GameStop or something. And then they're just gonna be disappointed. But if you have the ability to carry, hold, be patient, even if it goes to 350, it's fine, whatever. These are the kind of stocks I absolutely hate losing money on. Why? Because they're not fucking going anywhere. I have the patience of I don't know what analogy to make, but really my patience for these positions is so high simply because of the business that they are. All right. If I was solely trading some ABC Garbo stock, then yes, my patience wouldn't be there. I'd have a very strict entry and exit rule. But you will notice the kind of trader that I am. I trade primarily these large caps, solid companies. And you know what? I don't like losing on these kind of companies. And sometimes people will say, well, Riz, where's the risk management and where's the stop loss rule and all that? And I said, look, that's fine. Everyone's different. But for me, after 14 years and millions of dollars in profits, fuck, can I say it works for me? So, so be it.
Guys, I think Riz knows what he's talking about. All right. So Tom is always the play on word here. He says, I wish to ask a question about a stock. Hardy har har. Okay, so this piece of garbage was involved in a bit of a black swan event here that we got assigned on some short puts. It says he bought the stock, dropped a bit right around his stop loss. He's been writing covered calls, so he's decreasing his cost basis. That's spectacular. My question is, if you still have conviction and you like what you're seeing with technical analysis, when do you stop averaging down and cut your loss?
Yeah, so Tom, great question. And a great breakdown there. I would stop averaging down like yesterday. Okay, for this. I personally have not averaged down. In fact, you're an elite. You know this because I know you pay attention. That I have averaged down in some positions last week. None of them was Wish, and I haven't averaged down. In fact, I will tell you my average position is a lot higher than where it is, and I'm okay with carrying it. This is one of those companies that is a conundrum in itself. It's an enigma in itself because it's not a fund. It's not a company that's going to set your pants on fire. It's not changing the world. They sell garbage, relatively shitty, low quality products. Well, not relatively. Let's be honest. They sell shitty, low quality products, and the problem is that's what they do. But here's the counter argument to that, and why I even, didn't cut this loss or just move on, is because fundamentally it's actually deeply undervalued. If we look just at the numbers, we know that they sell crap, and they sell garbage at very tiny little little prices, $5 things, $10 things, $4 things, whatever. But their margins are great overall. We know that this company has some crazy marketing ads. We've all seen them most likely. We also know this has caught the eye of Reddit, Wall Street Bets, so on and so forth. And one of the reasons why we even had short puts, the Raptor method even in, was because the premiums were so damn good. And this is one of those kind of things where it just paid really well in the beginning, and then it just kind of didn't. And as a result of it not panning out in a later stage of the trade, it just kind of just get lower and lower. But I can tell you I've been able to offset some of my costs doing covered calls and just hedging like that. But I have not averaged in, at least not for quite some time. And I wouldn't recommend doing so either. Not because I see it going to like $4 or something like that, just because it's just not worth taking that chance, okay, on something you've already averaged in, and especially something like this. But to my point, this company is significantly undervalued. So it goes to show you can sell garbage, but numbers wise and metrics wise, this is a growth company. They don't make money, but based on comparables. So if we compare this to another e-commerce type of business, selling things online, blah, 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 they are significantly undervalued to the point that I know they won't do it, but if management decided to buy back all their shares and take the company private, they could, and it would make sense to do it. That's the kind of situation this stock is in. So I find that, the moment it starts curling up, the moment it gets picked up by the the media, or picked up by some of these traders on Reddit, social media, Wall Street Bets, the moment there's a analyst that starts covering it and actually outlines what I've said, oh boy, this can run, right? So that is why I've kept it. I can assure you, if someone else was looking at this, be like, Riz, you're crazy. Why are you bag holding this nonsense? And I could get it. But this is one of those very, 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 very rare events where I hold something like this. And like I say, there's always at some point an exception to the rules. Yes, and Jazz says something similar to AMC, although that one is a bit of another story altogether. AMC is actually overvalued even at this point. I know it went to 68 and whatnot, but it's still overvalued. But yes, Tom, hopefully this gives you some idea as to my take on Wish.
Awesome. Thank you for that. Okay, Matthew wants us to take a look at NTDOY. I'm pretty sure I remember it. Yeah. Okay.
Yep.
Yeah. So I remember, Matthew, you asked about this last week, and I gave you my opinion on it. Riz, what are you thinking about Nintendo here?
Yeah. Technical wise, good setup. Again, I haven't looked fundamentals detailed, but it's a good setup. I do know that Nintendo is, in my view, I know, look, most of us all grew up with, Nintendo products, Nintendo IPs, characters, Mario and blah, blah, blah. But Nintendo as a gaming company, first party gaming publisher, again, as a gamer, I can tell you for me, at least my age demographic, my tastes are one of the weakest in the area. Okay. It's great to have the nostalgia and whatnot, but they have next to no unique IPs. Their consoles are significantly underpowered. it's still, it doesn't mean the company is going under or it's not, but I'm just saying from that standpoint, I'm not too bullish on it. But from a technical standpoint, it looks good, being able to gap up from that, 55, 56 area touch point, and especially on Thursday and Friday. So that's looking good. Would I take a position now only purely on technicals and then having a stop at around 56 area? Okay, only technicals. This is not one I would bag hold. But if you already have a position, and depending on your entry, well, I mean, at this point, I would wait and see. I don't know all the information, but what your cost is and when you entered. But I would wait and see, and if it can come back up, because this could run. If we see markets continue to recover, then I think this can run as well.
All right, Matthew also wanted us to take a look at Baba.
Yes.
Baba getting pounded.
Yes. This is an extraordinary one. In fact, full disclosure and transparency, I have short puts on this. It's probably never going to touch it, and I'll gladly keep the premium. But nonetheless, this is again a very undervalued point. Now, the reason that it sold off like this is because of the big shift in policy in China. Again, I know many times I've mentioned some of these stocks, and they're all impacted by China. But here is, it is what it is. And these are not things that any analyst or anyone, even in the company, could have predicted. But this is where we are. This is a situation. And then again, another perfect example of the market factoring in, and in this case, I believe overreacting a bit to the changes, right? In policy, and especially, the CCP, the Chinese Communist Party. They have a very firm iron grip on the economy and how things run, and their version of semi-pseudo capitalism with a communistic slant. So I find that, perhaps this is setting up for a good buy. I personally do not go out looking for Chinese companies to take a position in. There's a wide array of Chinese companies that have been beaten down, rightfully so. There are definitely opportunities there. This is one of them. But like I said, I have lower down short puts. It will never likely hit it. I think I have them around, I don't have it in front of me, but I think 120 or something like that, which will never happen in the next week or two. But I would be okay taking delivery at that point. But for those of you not able to do those short puts, I think this is not a bad starter position at all. Okay. Again, do your own due diligence on kind of the negatives and the kind of, I would say, heavy clouds above for Chinese tech stocks and Chinese large cap companies. But this definitely is, all things considered, an opportunity if you have the stomach for it.
Absolutely. Okay, so we got a couple questions about Plantair, PLTR. I want to caveat this. This is actually kind of funny. Nagshwara mentions the gold buy. I actually posted this in our private chat, and I'll let Riz kind of tell you what's going on with that. But yeah, PLTR, kind of, we had held it for a while, pushed back up, has kind of come back down, and then rebounded pretty nice. Riz, what's your take on Plantair right now?
Yeah, a great overall great growth company in a very, very, very enviable spot where they're pretty much the only company that does what they do at the level that they do it. And what better customer than the government, right? So yes, I find that this has a lot of upside in the long term. There are some key issues, but we already have been through Palantir kind of look backs multiple times, so I'm not going to regurgitate. What I will say is I have a position I continue to hold. I did take some off at break even, but I do have still a decent sized position that I'm okay carrying and doing covered calls and yada yada. With that said, I know there's another question here on PLTR buying gold, like you said, Chris. You mentioned it, and in fact, someone in Elite Chat also sent that link, and I looked at that as well. And the gold purchase that they did on their balance sheet and their assets is 50 million approximately. That is literally nothing compared to the total cash on hand, and especially the total assets that they have. So the gold buy is negligible. I've seen a lot of fake news out there where apparently they might accept gold as purchase. No one, Palantir is not fucking settling transactions in gold. Okay. Then there's also perhaps it was also reported. Perhaps it's true or not. That one I don't know. Is that maybe they're gonna accept Bitcoin as well? Again, I don't. They have primarily all their revenue, or majority of their revenue, from government contracts, but they do have some in the private sector as well, like where they have it with public companies and even private companies, and essentially large multi-billion-dollar corporations are some of their clients as well. But even that, I don't think the government is going to pay them in Bitcoin, and I don't think their large customers are going to settle transactions in probably millions and millions and tens of millions in Bitcoin either. So I find these are just little kind of news with a slant, especially the gold one, which is, it's fucking negligible at this point. Like I have some gold coins, but stuff like that. But no way is it anything even worth blinking at in comparison to my assets total, right? So if someone can twist that and say that I'm bullish on gold, no, it just means I have it as a diversifier and just as another thing, but doesn't mean that I'm calling for the end of the world, or that gold is going to be the reserve currency again, or like it's going to replace the US dollar, or we're all going to be sending golden nuggets to each other via courier pigeon.
Yeah, so sorry guys, if any of you have been investing in pigeons, it's probably just not going to work out. And put the eye patches away, because we're not going to be digging up treasure troves of gold coins like pirates anymore. It's unfortunate, but yeah, it's just not on the horizon at this point. But it must be great to be in a position where buying 50 million in gold is pocket change. That would be a good place to be in, I have to say. All right, Aman says, what are our thoughts on Upwork? I don't recall the. Okay, Upwork. All right, looks like it touched the 39 support and is already up and looking good for a swing. I mean, yeah, it looks like it found the bottom here. Definitely found some nice support in this 39.40 area, 40, I would say. Seems to be a pretty solid zone for it at this point. But yeah, definitely looks like it's making a swing towards the upside. Only thing I'd be worried about is the 200. But Riz, what are you seeing?
Yeah, again, what Chris said, I echo what he said, and great find him on for this this technical setup. One thing I will caution though is we know this is bounced up, looking right from the $40, mark, 39 if you want to be specific. But take a look at the context too. We know Thursday and Friday markets rallied. Okay, everything was selling off. This was selling off before, and it continued to rise on Thursday and Friday alongside the market. So what you want to do is get a little bit more confirmation. Is this thing able to continue and recover and have a next leg up, even if markets consolidate or worse, drop? That remains to be seen. I don't think it's been able to do that yet, because all we've seen is just 2 days of green candle and a recovery, small recovery, but that's because of the pretext of the market as a whole. So I would keep that in mind, but definitely a solid setup, definitely something that I can see, working out if you go long, and as long as you manage your risk.
Yeah, volume not too inspiring either. So yeah, just be careful with that. But yeah, could be a really good technical setup. And I think this is a good one to end on. We're coming up right on an hour as well. Kyle says, can we take a look at Apple? Sure. Why not take a look at the one of the bigger companies in the S&P 500? Looks like it's battling the 150 resistance for the last month or so. If it breaks out, is this a possible play? Riz, what are you thinking about for Apple?
Yeah, so yes, you're definitely right. That clear resistance area around 150. I do not have a position. I do love the company though, but no position. As you said about the breakout, yes, if it breaks above 150 strongly, it can run, classical breakout on the technical standpoint. But here's a caveat. It needs to be within the context of the broader market. If we see the S&P 500 choppy and Apple passing 150, I don't see any reason why it will be able to hold it. I don't see any catalyst, unless they decide to drop some new product or something on us. I don't see it being able to rally without the backing of the broader market. right? So again, even if it does break out of 150, it needs to have that market support. If the market's consolidating or worse, pulling back, I don't see Apple being able to hold that breakout. So for now, right now, no setup. Okay, I wouldn't obviously go and short it or anything like that, but I'm also not buying it yet. But you are right. If it does break out of that 150, it can work well, assuming markets are also chugging along upwards.
Spectacular, guys. I want to thank everybody for coming out this evening. And if you guys are watching this on YouTube, please make sure you click that subscribe button. Leave us a like down below. Riz, want to get your final thoughts here on the market. What are you looking at this week? Are we going to be looking more at inflation numbers? Is the COVID number something we need to be keeping an eye on? And what are your thoughts going into this next week?
Honestly, Chris, you read my mind. Glad you actually mentioned this as a recap. One big thing I mentioned that I should mention, sorry, is COVID numbers. I just got an alert just today that I think the U.S. total cases, positive cases, was over 300,000 today. That's a big shift. Okay, from the moving average, it's a big shift from the trend. So, needless to say, that's not ideal. Secondly, I'm going to be keeping an eye on futures tomorrow on Sunday, 6 p.m. Eastern when they open. I wouldn't be surprised if we open red because of this new increase in cases. I am currently going to keep an eye on volatility as well. We know the VIX has moved up a bit, but then it got clobbered on Friday. I think it dropped like 10% or something on Friday. A big drop. But yes, keeping an eye on the VIX. We know it picks up like a crazy vertical upwards and then just gets hammered back down because that's what it's meant to do. It's meant to just crush downwards, especially once markets are stabilized and once they're rallying. So I'll be watching the VIX volatility. I'll be, of course, watching the broader market. The current 4,400 level stands, okay, as a support still stands. We'll see if we can keep this pickup. I don't know. I don't know how strong it's going to be leading into Monday, upwards or downwards. But I would like to first get some confirmation of what's happening and how the sentiment is. We saw sentiment change from bullish to bearish very quickly. In earlier in the year, like take a look at I would say March area, right, leading up to March, and every once in a while we have these big drops, but they're bought up. Maybe this is just a tiny blip and we come back to all-time highs, or maybe this was just a little bit of a dead cap bounce and we actually see the next leg lower this week. So stay tuned. We'll keep an eye on it.
Awesome. Thank you for that, Riz. Really appreciate it. Thanks for coming out. It's always a pleasure to have you on the show. And thanks, everybody, for coming out for all your amazing questions. Riz Elite is as good as it is because of all of you that are part of this. And if you're not part of Riz Elite, if we decide to open up membership again, guys, make sure you jump on that because it is something that can absolutely change your life and change the way you trade. Thanks again, Riz. And we will see everybody in Discord on Monday.